Hello everyone. This video is basically for salaried person who don't know the ABC about the income tax provisions which are applicable to them. This is not the lecture to note down, so you are requested to listen only, and this will be enough for you to understand. So, no doubt that the understanding of Indian income tax is a tough job, but I think all should know the basic of income tax so that at the time of filing income tax return you all should be able to know whether your return has been filed with correct data or not. And what is the reason to make you aware about the income tax provision? As you must have heard about the income tax department Bangalore had trapped a person who used to file income tax return on behalf of salaried employees of corporate offices with fake details of income and exemption claimed, which resulting into bogus claim of refunds. Presently, the case is being probed by the income tax department and CBI as well. That's why I just want to make salaried class aware about the basic provision of income tax so that you will be able to check your details reported in your income tax return and will not be fooled by anyone. What is the provisions under income tax for salaried person? I have tried my best to simplify the provisions and concept of income tax for all of you. Whatever salary you are getting, and if the annual salary in a particular year, that is also called previous year, is above the exempted limit, that is presently 2.5 lakh for individual, it is duty of your employer to deduct TDS. TDS means tax deducted at sources, and deposit the same into government account. That means if your taxable income is more than rupees 2.5 lakh, TDS must be deducted from your salary. The responsibility for deduction of TDS from the salary lies on your employer, not upon you. In layman language, TDS can be said the income tax, which needs to be deducted by the employer from your salary. When your employer deducts TDS from your salary, it is his responsibility to deposit the same in income tax account before prescribed time limit and subsequently file TDS return quoting the details of your PAN number against whom the TDS has been deducted, so that the credit of the TDS may be matched and can be claimed by you while filing of return of income. If the excess TDS has been deducted, you would be liable to get a refund, and if any shortfall in TDS, you will be liable to pay the remaining taxes due. What is the previous year? It is the year in which you earn your income. In India, it starts from first day of April and ends on 31st of March. That means if you say that you have earned your income for the year 2019-20, that means your income has been earned for the period from 1st of April 2019 to 31st March 2020. Now next, what is assessment year? Assessment year is nothing but the year in which your earned income is assessed. It generally starts immediately after end of the previous year in which you have earned your income. In layman language, it can be said that if your income for the year 2019-20, your assessment year will be 2020-21. Now you would like to know why it is called assessment year and how it is different from the previous year. It can be understood from an example. Suppose you earn your income in the year 2019-20, which ends on 31st March 2020. The income can be assessed only after completion of previous year, and the year during which your income is assessed is called assessment year. You can see, as it sounds assessment year, That means it is the year in which your earned income in previous year is assessed. In simpler way to remember the previous year and assessment year is that the assessment year is the year that follows previous year. For example, for previous year 2019-20, assessment year will be the 2020-21. At the end of any previous year, the employer provides all the employees Form 16, which is nothing but details of your income and accordingly details of taxes deducted from your salary. Nowadays, you can see your TDS or any kind of tax deducted in Form 26AH, which is available in NSDL website and can be accessed from your income tax e-filing portal. Here in 26AS, you can see what kind of taxes have been deducted on what kind of income. If excess tax has been deducted, you can claim it by filing return of income, and the income tax department, after verification of your details which is reported in your return, would refund your excess tax deducted. And if in any time before filing of returns you come to know that there is lower TDS deducted corresponding to your income, you can pay the balance amount by way of self-assessment tax. The self-assessment tax is nothing but shortfall of taxes paid during assessment year before filing of return of income. The due date for filing of return of income is set as 31st of July every year for taxpayer whose income is not auditable, as normally the income of the salaried person needs not to be audited, hence the due date for filing of returns of income for them is set as 31st of July. For the current assessment year, the due date for filing of return of income is 31st of July 2020. If in the case you don't file your return of income on or before the due date, you can file your return of income after due date, which is called belated returns, which attracts some interest chargeable. Further, if you have filed the return of income on or before the due date as prescribed by the income tax department and found some details has been reported in returns are not correct, you can file revised return of income with correct details. But please note that the revised return of income can only be filed if your original return is filed on or before the due date. If you are employed with more than one employer during the previous year, it is your duty to provide such details to your current employer. You can provide income details and details of taxes deducted from your previous employer or other employer. It will help your current employer to arrive correct tax liability and in deduction of tax, that means TDS. So there would not be any variation in TDS or taxes. So I also recommend all of you who are salaried person and file the return yourself to get it filed by any expert like auditor or CA or ITP. You should also verify the details of income filled in the return. Anyway, if you file or get it filed the income tax return, the details filed in the returns will be deemed to be filed by you only. If any variation or misreporting of income is found in IT returns, penalty and prosecution may be initiated against you only. No one will be responsible for this. So I sincerely recommend that before filing of return, you must ensure that the details which are to be reported in returns are correct and also check whether proper tax has been paid or not. This was the basic concept of income tax for salaried person. It is my first video to make you aware about the basic concept of income tax for salaried. I will be updating new videos in coming days, which will be really beneficial for all of you, and it would also be boosting your knowledge about the income tax. I will try my best to simplify the provisions of income tax so that a common person may also understand. If you have learned anything from this video, you may like and subscribe the channel for forthcoming new videos and updates. Thank you for watching and listening. Thanks a lot. Bye.